Hey guys, welcome back to another technical analysis study here. It is 9:15 on May 16th, and just looking at a little bit of a master pattern developed here, and just wanted to go over the three screens on TraderView. So on the first screen, I have the one-day S&P symbol, and this is the one-day tick per candle using some tools to identify, of course, areas of contraction, expansion, pullback, right? So I identified here that we are in a uptrend. So I'm using the first thing is where is the trend? The trend is up or down. The trend is actually up. And we can really see that clearly just by the chart. The direction of the trend is up. So we want to take trades that are in that direction to be successful, the probability of success. So the other thing that I look at is what is happening inside this box. This box is actually telling me that there is some congestion. There is going to be a tug of war between market makers, the bulls and the bears, of where they want to take this price. The price action is always a reflection of what's happening on the volume side. So I'm going to look at what's happening here in the one day. So each bar is one day. So what we have here is an accumulation, a tug of war between what's happening in the media, the news, the reports, the events happening on that week. This is one, two, three, four, five, six candles. So it's a whole week. And then we see a breakout on the seventh candle. And it's a nice, strong breakout. And it's followed by a really nice, big, strong volume energy push right here. That's an indication that this pattern has been broken. Now, I don't want to enter any trades until this pattern, until I have a clear understanding of what's happening on the market makers and traders, institutionals, professionals, smart money. So I'm going to stay out of the market until it's either going to break down or it's going to go up. It's going to break either above the 5.7 level or it's going to break below the 5.576, and most likely it's going to go down to this level right here, 5.385, which is another support level. Okay, so this is a resistance and that's a support. Okay, the green line, this is the middle of the trading range. So each bar, the high and the low, I put this green line to let me know that is the actual level, that it's in the middle of the trading range. Okay, I'm gonna set up a imaginary support line here, so I'm gonna use that as a stop loss. Okay, so I'm gonna buy the 56.25 vertical put, right? I'm going long. I'm gonna put a vertical put, right? So how do I do that? Well, I'm gonna go right here. I'm gonna do long, and I'm gonna put the arrow right there where I see is a support line for me, and then I'm gonna click. That's gonna automatically open up the visualization, the visual of the trade. And what I see here is I have the support line, which is my stop loss, my entry point, I mean, and then I have my stop loss right at 3.5385, right? Now, that is a really, long and stop, because I want to be able to have room for the market to do whatever it wants to do. If you want to bring a little bit more less risk on your trade, you can always bring it a little bit. I would say utilizing the first candle out of the box. So I will use this level right here, the candle on May 1st, as my stop loss right there. That's 551. Okay. And then I'm going to count 1, 2, 3, 4, 5, 6 candles. And that's the box right there. Okay. Now that's how I set up my visual. And then I'm going to look at the 4 hour window. And what do I see here? The 4 hour window is letting me know right now that obviously it has been identified as a confirmed long. Okay. And I'm going to just move this around. Just gonna bring this here again. I'm not gonna enter because I'm not gonna see the development here yet of the pattern, right? So I see that it's entering, it broke out. Now I'm gonna let it develop and see where it goes. There's gonna be more opportunities. So I'm gonna wait until the chart starts to develop a little bit more consolidation around here, because we know this is just the one level right here. We see a contraction and then expansion. I'm going to wait for another consolidation pattern right here. So I'm going to use the 30-minute now to really see exactly what it's going to be the next extension, right? So the market makers are still deciding. There's a lot of wiggle room here. This is where a lot of traders get actually um, their triggers, their stop losses they get taken out because of the intensity, as you can tell by the wicks in the candles, how much volatility there are here, right? You definitely don't want to be in the market yet. You have identified that there is a pattern, there is a new trend, and they decided that the market is undervalued. They want to bring it up. So great. That's great knowledge. Now, when I'm here, I'm going to get to understand that there's going to be a shakeout, and I'm going to wait for the wiggle to go down. And that is a confirmation. Okay, I'm going to look at this, that the market has reached a new bottom in this particular time frame in the 30 minutes, because I am going to go long because it is an uptrend. I'm not going to take a short. That's just a shake. It is a market manipulation. They're just hiding their true cards from the traders. What the market makers are doing is they're shaking up weak hands, and then they're going to drive the market to more liquidity, to really grab liquidity, grab those stop losses, activate those stop losses until probably they can't. They know where the stop losses are in their terminal, so they are very good at that. They are going to shake people up, and then they're going to take the market right up. And then this is basically the opportunity right here. 5866. That's at this time on May 15. So on May 15 is where you want to place your trade for a beautiful long trade. So you actually are setting up the target right here for the beautiful trade that's going to take you it's going to take you from 5.8. Yeah, it's going to give 5.864. So you're looking at the trade to happen here at 5.863, and you can ride that all the way up to 5.986. A beautiful trade right here. Okay. If you have any questions, comment below. Let me know what your thoughts are. Do you follow the same pattern of the master pattern. It's a great way to really look at the market and avoid unnecessary um, unnecessary losses for being in the market at the wrong time, and then really being disciplined not to swing at every trade. All right, guys, I hope you enjoyed this. I hope it helps you. Happy trading, and I'll talk to you soon. Bye bye.